Hello, everyone. This is your market update for November 7th, 2023. We're going to start with gold, touch on silver, platinum, gold miners, and then I'm going to spend a little time on the unemployment rate. Looking at gold daily futures, prices are indeed breaking lower, and it looks like this will be a pullback. The thrust I was looking for above 2020 to suggest that we were going to attack this all-time high level. It looks like it's being postponed, and this is probably going to turn into what I'm assuming will be a normal pullback into like a daily cycle low. If we jump over to the Fibonacci retracement level, we'll see that the 0.38 retracement level is around 1945, and the 0.50% retracement level is around 1922. So I'm not sure if prices are going to come all the way back to retest this trend line. They could reverse here for all I know. We'll just have to take it one day at a time, and I'll be looking for a swing low to mark the potential bottom and the start of a new uptrend. Over to silver. Silver's been consolidating. It's testing this support area around $22.50. If it breaks through here, then we could come back to 22. And again, that's been my line in the sand. I don't really want to see that broken, but if it dips below it briefly, not a big deal. I just wouldn't want to see a sustained decline below it. Over to platinum. Platinum is back to the trend line and support around 900. I'm not sure what's going to happen here. If this is a successful back test of the trend line, then we really need prices to stop here and to turn higher. I don't know that they will. If we see downside follow through, then it's possible we retest this area in October or possibly break to new lows. Gold miners, with gold down significantly overnight, gold miners are probably going to gap lower at the open, and we could come back to fill this gap from a little while ago, or possibly retest the low here around, what was that, 2761. We'll just have to see what happens. But yeah, it looks like we're going to be in for a little bit of a grind. Over to the unemployment data. I wanted to note that I got a lot of stuff on here. Let me get rid of some of this for a little while. So up here is the unemployment rate, currently at 3.9%, and this green line is the 6-month moving average. So the unemployment rate is above the moving average, and this looks like it is moving higher. And the reason I'm looking at this is because I'm trying to figure out when this recession is coming. Down below, we have an indicator. This is the Chande momentum indicator, oscillator, actually. And I'm doing a study on this right now, and it appears pretty much anytime that this gets above zero, which it is now, that indicates that momentum in unemployment is higher. And the trigger for an official recession is when it gets above the 20 level. And I'll put those lines back in now. So this yellow line represents the 20 level, and when it gets above that, that has almost always coincided with a recession. Going back, I mean, I take this all the way back to, I think, 1974, and I'm going back further, and it's nailed a recession almost every time. So we're close. We are very close. In September, it was at 17.65. Momentum is higher, and I would guess that within the next couple months, 2 to 3 months, we will break above this 20 level, and then we'll more than likely be very close to or in a recession. And that's not usually good for the stock market. So we'll see what happens, but I'm watching this closely, and we'll just have to keep an eye on gold to see if it shows any signs of reversing. But right now, it looks like we're in a pullback phase. Okay, hope everyone's well. Have a great day. Bye-bye.